So this is Group 6, Greater Oceania Economic and Financial Environment. We're going to first start with Australia. Some Australia currency info. They use the AUD with a current undervalue estimate at 11.1% and a current exchange rate of 0.69. So they are very competitive to the US dollar. They had a low of 0.485 in April of 2000, as well as a high of 1.487 in February of 1974. Brief historical summary is conversion day was known as on February 14th, 1966, which is when they switched over to the Australian dollar from pounds, shillings, and pence. Taking a look at Australia's economic state, we can see that they are relatively stable. Obviously a bit of a dip recovering from COVID-19, having that GDP impacted by interest rates. Some history improvement of regression. They went through a post-World War II boom as well as avoided a 2008 recession, which is very impressive for a country of their size. They did go through a pandemic recession, and they're still dealing with some global supply chain issues, primarily due to the Ukraine war and inflation. And if you take a look there on the right, you can see that just how many jobs were lost during the pandemic, and this is represented in thousands. Looking at their GDP, they are at about 66.59 thousand per capita, which is pretty good. Their incomes before tax, there is a differentiate between their public and private sectors, which is to be expected in a developed country. Public, they're looking at about 81,114 Australian dollars, which converts to about 55,000 in US. Private sectors are going to be a little bit less at about 74,152, which is converting roughly to about 50,000 US. Median household is about 101,222 in Australian, which converts to about 67,600 in US dollars. As we mentioned, that GDP per capita is going to be 66,590, and their GNI score is 34.3. And you can see kind of how that GNI score compares to the United States on the chart right there. Lastly, the economic risks of Australia. They're considered low risk in business climate. Some general factors of economic risk are obviously going to be their export prices, pandemic recovery, as well as rising inflation. You can kind of see just how far the United States is from Australia, so it's a bit of a travel. So some factors of risk to the U.S. companies right now are going to be that supply chain disruption, primarily from the Ukraine war and China. Taxations and regulation changes, as well as consumer behavior, specifically unpredictability. Next, we're going to be moving on to New Zealand. So some currency information about New Zealand. They do use the New Zealand dollar, and you can see that it's 12.3% undervalued from the US dollar, which is pretty competitive with a conversion rate of 0.634. A low of 0.396 in October of 2000 and a high of 1.49 in October of 1973. It was the New Zealand Decimal Currency Act on the 10th of July 1967 that put the New Zealand dollar in effect, and before this it was pounds, similar to Australia. Taking a look at New Zealand's economic state, they have a lot of similar aspects to Australia. Really the only significant difference is going to be that they did enter a mild 2008 recession, but comparatively to the United States and a few of the other countries that were affected more heavily, it was seen as very mild. And you can see on the chart there that they actually had a pretty high employment during the global financial crisis and a high employment during the COVID-19 lockdown. So looking at their incomes, their annual is about 61,692 New Zealand dollars, which translates to about 37,687 US dollars. The median household income is about 122,500, which translates to almost about 75,000 US dollars. And you can see here that the GDP per capita of New Zealand is about 47,394 as of 2023. And the GINI score was a bit too low to chart, but it's estimated to be about 0.34. Looking at New Zealand's economic risks, you can see that they have an A3 as a country risk versus an A1 for a business risk, which is a bit interesting because that's not something we're usually seeing in relatively developed countries. So some general factors of economic risk are going to be reliance on foreign capital. They are an island, so everything has to be imported and exported. They have reliance on Chinese demands, shortage of skilled labor, as well as being vulnerable to natural hazards. again, primarily being on an island. So some factors of risk to U.S. companies are going to be the economic slowdown, and these deal with high interest rates, inflation, and political instability. And some other aspects are going to be the shipping costs, biosecurity, cultural sensitivities, and more recently, cyber attacks. So quickly looking at their currency info history, you can see that the Indonesian rupiah is 56.8% undervalued against the US dollar. So this is significantly lower than any of the two countries that we explored previous. And their current exchange rate is about 0.000066, and that was as of 2024. Now, looking at that chart, they have had a significant drop in the late 90s. They had a low of 0.000061 on March of 2020 and a high of 0.000466 on February 1994. And a brief historical summary of that is they had their colonial period, the Netherlands Indies Golden. The Netherlands Indies Golden as well as the Japanese Golden, they actually introduced the rupiah, and in 1951 the IDR became their national currency. A quick review of their economic state. So they are beginning to stabilize and seeing some continuous economic growth. Their consumer inflation rate has dropped to 1.84 in September of 2024, which is the lowest rate seen since November of 2021. And one of the main contributors of that is going to be their 2.57% drop in food prices, as well as their lower transport prices. So some history of improvement and regression. They have an improved agricultural sustainability sector, as well as a reduction of trade barriers due to global integration. This primarily took place in the 1980s, and they've shown some economic resilience through the Asian financial crisis in the 97 and 98, some political instability and corruption during the mid to late 20th century, as well as dealing with that COVID pandemic again. You can see some graphs on the right here talking about their average GDP being a bit, again, lower than the previous two countries we've seen, but it's definitely showing signs of increasing. So Indonesia's income, they have had an average monthly earnings increase since the COVID-19 pandemic. In 2020, they were at about 2.491 million IDR, which is about 160 US dollars. And in 2023, they are almost at 3 million, which is roughly 190 US dollars. The median household is going to be 46,707,000 to 62,276,000 or million, excuse me. And that translates to about 3,000 to 4,000 US dollars. Their GDP per capita is going to be about 82,064,990, translated to 5,271. You can see that their GINI score is actually pretty high. This indicates a pretty good distribution of wealth, and there they are comparatively to the United States below. Lastly, their economic risks. Out of all the countries we talked about, they are the highest economic risk in the context of business. Some general factors of economic risks are going to be their GDP contraction that followed the pandemic, some intellectual property rights issues, as well as human rights issues dealing with a lot of health, labor rights, and indigenous peoples' rights. And the factors of risk to U.S.-specific companies are there's going to be pressure for long-term commitment to investment, a lot of decentralized decision-making, some legal and regulatory uncertainty, which kind of ties into that corruption, some economic nationalism, as well as a lack of consultation with stakeholders. But you can see that their annual growth, is increasing at a steady rate comparatively to some of the other charts that we've seen. Quickly recapping Australia, they are the most comparable to the United States in our findings. They're the world's sixth largest country. They've been relatively stable aside from the COVID-19 pandemic. You can see that their public income is pretty solid comparatively to Indonesia. And some risk factors are going to be commodity prices, as well as dealing with that recovery from COVID. Again, recapping New Zealand, you can see that they are an island country. Their economic status, again, is relatively stable, but their GDP was impacted by high interest rates due to the pandemic as well. They did have that World War II boom, similar to Australia. Their average annual income is, again, pretty solid. And lastly, their economic risk is they're going to be reliant on foreign capital. and they're very vulnerable to global market and specifically natural disasters. Lastly, wrapping up with Indonesia, this is a bit of a different country situation compared to the other two. So they do have the world's fourth largest populace and the third largest democracy, but the exchange rate is very undervalued comparatively to the other two countries. Their economic state is currently stabilizing with positive signs of recovery, which is important to note. They've made significant strides in enhancing agricultural practices and food security, which have proved for them positive returns. But some factors to consider for that, again, are some human rights issues, health issues, as well as labor rights. And some risk factors to U.S. companies, again, are going to be decentralization of decision making, as well as nationalism and the lack of consultation with stakeholders.